Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, the tax hikes and higher tax headaches are coming, boomers and retirees, and I want to keep this super short and simple. The House has hiked taxes. In fact, it approved over $2.1 trillion of tax hikes, and here's what's coming for you and I. The takers are going to continue to take from us, the makers. So if you're a high income earner, you're a strong saver, and I say high income, $200,000, $400,000, you're a business owner, you're a strong saver in IRAs or 401ks. You're contemplating Roth conversions. You're somebody that saved $1 million or more between all of your brokerage, IRAs, 401ks. You want to learn how to have higher returns with less risk and be able to qualify for what's called private equity, non-direct stock market correlated risk investments. You want to learn how the ultra wealthy have been able to do this while keeping their taxes low and their returns high. Well, the war on wealth is here, folks, and the hikes are coming. But the time to still be able to get tax protection done from this tidal wave of taxes coming is, without question, still having time to get that done before the end of 2021. Here's the impact. I'm going to go through the key tax change hikes that just passed this week. And I'm also going to hit a case study to teach you what is possible. So number one, they raised the income tax rates back up to 39.6% at the top tax rate. So pretty much all tax rates are going up about, give or take by the time it's said and done, about 3%. On top of that, they raised the capital gain tax rate from 20% to 25%. And that's retroactive as of now. We'll see if it officially passes, but that's going back to anything that you sell after September the 13th. They also raised corporate taxes from 21 to 26.5%. And for those of you listening that are small business owners, maybe you're not a C Corp, they also reduced what's called the qualified business income deduction by putting a cap on it. And so basically all across the board, taxes are going up. And as we know, when this administration says nobody is going to feel a tax increase unless they have income over $400,000, that's not entirely true, because when you raise taxes on corporations, they don't pay more taxes. They pass that off in another cost in the form of higher goods or services, or unfortunately lesser returns to shareholders or stockholders, hiring fewer people, which pays less tax into the economy through the Treasury. And at the end of the day, right, puts more pressure that less people are paying higher wages or now lower wages or less wages into Social Security benefits and Medicare. And now we've got Medicare and Social Security going broke quicker, right, with a 24% reduction that may be here as quickly as 2030. We've got higher tax on Social Security, higher tax on income, higher tax on corporations. And here's the big one. If your income's too high of a level, and I'm going to talk to you about Mark and Dottie, which if they waited till these new proposals went into place next year, they wouldn't have been able to even do a Roth conversion. Here's what they were up against. Worried, like many of you listening that have reached out to us, concerned and worried about taxes, and for good reason, for all the reasons just given. But also to replace income, working income. They manage some rental properties as well as his W-2 income. Now, I'll be teaching this at retirementprotected.com. That's retirementprotected.com. So if you're a high income earner or been a high saver in IRAs or 401ks, or you've got a capital gain or an asset that you're selling that's going to have some tax exposure, the time to act is now. Avoid this tidal wave of higher taxes coming, right? These higher tax hikes are going to cause a lot of tax headaches, and don't lose your return unnecessarily to taxes, because taxes erode returns, which erodes lifestyle. So what Mark and Dottie are able to do is they use the deduction, I'll teach this Tuesday, with some of the proceeds from the sale of their property before the values drop, before their taxes go even higher, and they're actually able to get rid of all of their IRAs to Roth IRAs, not paying tax, $1 out of tax out of their pocket, but by using the deduction to do it, which also saved them about $100,000 of unnecessary capital gain tax by using that deduction. And now they were able to actually use higher returns with less risk investments that are also being prohibited after this year, that can now give them 50% higher income than their working income today, folks, and a majority of it tax-free. And no inheritance tax to their kids, no required minimum distributions. These are the things that are possible when people take the time to discover and uncover their hidden wealth. Go to retirementprotected.com. That's retirementprotected.com, and learn how you can avoid the tidal wave of higher taxes coming, avoid the headaches of these higher tax hikes, and don't lose your returns or your retirement to higher taxes. Retirementprotected.com, retirementprotected.com.